A revised report by the central bank reveals the South Korean economy saw a stronger expansion of 1.3% in the third quarter of this year, in a clear indication of steady momentum despite global headwinds. Do stay with us. Hello and welcome to Press Perspective for this Thursday, December 4th here in Seoul. I'm Min Sunhee. The South Korean economy maintained its growth momentum in the third quarter of this year, driven largely by exports of chips and cars. That being said, today we touch upon the local economy, and for this I have Celio Fioretti with French daily Croix here in the studio. Celio, welcome back.
Glad to be here.
I also have Professor Song Soo-young at Chung-Ang University joining our talk virtually. Professor Song, as always, it's a pleasure to have you with us.
Yeah, thank you for inviting me, and my pleasure.
Right, Celio, we shall start here in the studio. So let's begin with the stellar performance of South Korean exports for the month of November.
Yeah, the picture is remarkably bright. Exports jumped 8.4% compared to last year, marking the 6th consecutive months of growth and beating market expectation by a wide margin. What really drove this surge, as you mentioned, were semiconductors, which have become the backbone of Korea's economy, export economy, and chip shipments soared by 38%, reaching a record of $17 billion in a single month. This is largely thanks to the booming demand for advanced memory chips in AI-powered data centers. The automobile sector also delivered strong performance, rising 13%, as uncertainty around U.S. tariff were cleared following the trade deal signed and finalized by Korea and the U.S. in November. That agreement prevented the steepest rise in tariff by the U.S. government and gave Korean automakers some confidence and room to breathe and preparing to export more. Now, if we look at destination for those exports, export to China climbed nearly 7%, and sales to the Southeast Asia also grew solidly. Shipment to the U.S., on the other hand, declined slightly by 0.2% because steel machinery and auto parts still suffer a bit from the rise in tariffs. But also the European Union export dipped to almost 2%. All of this, though, explain why the Bank of Korea has revised upward next year growth outlook. The semiconductor rebound is strong enough to offset much of the drag from the tariff, and with imports barely growing, just 1.2%. The country will have a trade surplus from around $9.7 billion, its largest since 2017. So overall, November was not just a good month, it's also a signal that the Korean economy is getting back on track and profiting from this boom of demand, especially in sectors that Korea is really competitive, such as semiconductors and automobile.
Right, and staying on the trade front, Professor Song, how would you explain the resilience of South Korea's exports in the face of U.S. tariffs, which had earlier fueled quite a bit of concern this year?
Yeah, actually, we avoid the brunt of the tariff increase. So we have settled with 15%. This is a very outstanding accomplishment by the government and also the exporters' efforts to maintain the status. But particularly, I would like to see the numbers because the 2024 was the worst, because we have witnessed some minus 0.2% GDP quarterly decrease and merely just hovering around the 0%. And we end up with the first quarter of 2025 end up with minus 0.2%. Now, the resilience with the help of the resilience, and then we have our economy has recovered. The GDP growth rate has reached 1.3%, and annually year on year has reached 1.8%. That is very surprised. But however, what I'm a little bit concerned is because of this would be, I hope it should not be a temporary one, but as Celio has mentioned earlier, that semiconductor surge of the demand for AI, HBM, high quality semiconductor, in addition to that, because of the AI fringe, we have some shortage of some traditional unglamorous semiconductors, such as the simple DRAM, and that actually price of that the DRAM has also increased. Fortunately, Samsung has maintained some production capability of the DRAM. So this looks like some kind of a perfect portfolio, given that the current cycle of the semiconductor price. But I'm a little bit cautious about this could be maintained. This will not continue. So we have to wait and see how it will be played out. And then in 2026, but I have a little caution, but at least this indicates our resilience of the economy is quite strong. And then I hope some external disturbing situations should not be developed, and we should make efforts not to such disruption to take place in the future.
Right then, before we delve into some of those concerns mentioned by Professor Song, Celio, as I mentioned at the start of our talk, findings also show that the South Korean economy expanded at its fastest pace, I believe, in roughly about 4 years during the third quarter of this year. Again, do give us the figures, and what are pundits projecting for next year?
Yeah, turning to the broader economy, new data show that South Korea expanded its economy in the fastest pace more than a year on the third quarter. According to revised figure from the Bank of Korea, the economy grew 1.3 quarter on quarter, slightly higher than the initial estimate of 1.2%. It may seem like a small revision, but it marked the strongest quarterly growth since late 2021, when the economy posted a 1.6 expansion back then. If we look at the annual picture, growth reached 1.8% compared to a year earlier, again outperforming the earlier expectation of 1.7%. The improvement reflected a stronger than expected exports, particularly as we mentioned in semiconductors, and a modest recovery also in domestic demand, despite the ongoing pressure from high interest rate, but also global uncertainties. So what does this mean going forward? Many analysts say the third quarter's numbers are an encouraging signal that the economy is regaining momentum after a sluggish first half. And the Bank of Korea itself recently suggested that it may be nearing the end of its monetary easing policy, partly because the outlook for next year is really promising. Pundits also generally expect a continued recovery into the next year, with export, especially high-tech components, remaining the main driver of the economy, and the rebound in chip demand, along with also the easing of inflation, is expected to support growth in 2025 and 2026. Some economists are even revising their forecasts, projecting Korea could outperform its initial expectation if the global tech spending remains strong. In short, the latest data really reinforce that the view that South Korea is entering the new year with really optimistic economic output and a stronger tailwind than initially expected.
Right then, despite the optimism by pundits overseas, then Professor Song, let's touch upon some of the concerns you mentioned earlier. If I were to ask you to identify two potential variables to the South Korean economy next year, what would you choose to highlight?
First, I have a little bit concern about the relationship between Japan and China. Recently, Trump and the U.S. would like to have some favorable and hospitable relationship, and they ease the tension between the two countries. But instead, then Japan suddenly raised some kind of tension against China between the two countries. So this could be a little bit turmoil, geopolitical turmoil, should be contained within the East Asia, and particularly in between the China and the Japan. So I think the South Korean government may have a role to some compromise these some tensions, and then mitigate the tensions not to be developed as a serious situation. Another part is I have a concern about the PMI index. Procuring managers index have shown that it looks like a little bit pessimistic, particularly China and Japan and South Korea and Taiwan all together have shown some losing confidence, or maybe the actual prospect of the production would not be as good as expected. However, the Malaysia and the Southeast Asia countries have shown clear recovery and the economy grow again. Therefore, this could be some kind of not a crisis, but I think our Korean government take into account these effects and stabilize the tensions in East Asia, and then try to increase some kind of export or trade between the Korea and some Southeast Asia, such as growing countries such as Malaysia, Indonesia, and Vietnam. So clearly, I hope this does not turn into some kind of sudden recovery and that disappears in a moment. But I hope this will continue. The current some phase of the recovery could continue as long as we have to take care of these situations. And then what would be the best is not too far away or not too close. So keep the balancing act and balancing trade policy and the balancing position among between these two countries. That could help to mitigate the tension not to be increased to become some kind of a trade war or other things.
Right, so to seek balance among its trade partners, of course, China and Japan. Professor Song, if I were to ask you to come up perhaps with a guideline of economic policy for the administration going into next year, what would you highlight as some important aspects beyond the balancing act and diversifying the export market?
Yeah, beyond the balancing act, what is important is to make the domestic economy to recover. This is always true because some economists have concern about the U.S. economy recovery could take place following the path of K-style recovery. Actually, most of the K-style culture, K-style some kind of technology indicates a positive, but K recovery path is not positive at all because only the winner takes getting more shares and the poorer become the poorer. So this is usually described as a K-style recovery. So that is concern lies in the U.S. economy. And also it is true of South Korean economy. So to that regards, the South Korean government must pay attention to the increase and maintain the welfare improvement and to keep the demand power among the consumers. That is very important to maintain some portfolio and the stabilization of the domestic economy because this could work as a buffer against some kind of unexpected disruption in export and then sudden downturn of some semiconductor cycle. So to that regard, then domestic economy always used as some kind of buffer to support the overall Korean economy's growth and resilience.
Right. Then beyond the South Korean economy, Celio, in the international arena, how does the Trump administration's trade policy in the new year look to affect global trade?
Well, if we look to 2026, the World Trade Organization is warning that Trump's economic policy will likely cast a long shadow over the global commerce. And the numbers are quite telling. After a strong rebound in 2025, with global trade jumping to 5.5%, the next year expected growth will be collapsing to just 0.5%. That's a huge downgrade from the original forecast of 1.8%. Why such a sharp slowdown? Well, the World Trade Organization points to Trump's policy and the full year impact of tariff imposed by the US since August 2025. And these tariffs are hitting inputs, but also raising the costs of products, the cost of exporting, importing, and it will certainly discourage businesses to increase their capacity and their production. Even close partners like the UK are now facing a baseline of 10% tariff, and that really show how hardline the policy of Trump is, even regarding its allies. And this comes on top of a global economy that is already cooling down with depleted inventories and softer consumer demand. The World Trade Organization expects inflationary pressure to push many firms toward a trade inactivity, which means they will essentially delay purchases and scaling back production. Ironically, one of the strongest force boosting trade these days, artificial intelligence and the HB chips, is also contributing to volatility. In 2025, AI-related goods grew nearly 20%, mostly in Asia. But this comes as a fear it might be a bubble that will burst in some years, anyway, it won't be enough on itself to compensate the drag of the US tariffs and the protectionist policy that we see appearing here and there. And there are pockets of resilience, particularly in emerging markets. The South-South trade is growing, and Korea is part of that with improving the export to the Southeast Asia, for example. But we'll see how that trend can develop, because we know now that our economies globally are tied to the US market and the US policy. And if the new trade war appears or there's more tension around commerce, it will continue to affect every global economies.
Right, like a domino effect, of course. Professor Song, consumer prices here in South Korea rose 2.4% in November on year, remaining unchanged from October, but hovering above the BOK's target of 2%. What are your thoughts regarding this latest reading and its broader implications?
Mainly the 2.4%, which is higher than 2% target, is maybe because of the tariff effect, and because of that, the some core consumption I'm saying there's some food and oil import or some other commodities price could have some effect on that. But my concern, we do not put much concern about the consumer price, because the domestic economy's consumption is clearly in recovery. But I'm clearly worried about that this cannot be some permanent one, because despite the surge of the export, domestic demand and the domestic consumption should be supported by some increment of the income and the purchasing power within the domestic economy. To that regard, I believe that what is more, the Bank of Korea's chairman should consider some decrease in rate to the 25 basis point against Mr. Celio has mentioned earlier that because of the surge of our growth rate of GDP. But this is mostly driven by some export. And this export is a semiconductor. The HBM demand is very stockpiling. As the WTO report has shown that 5.8% or 5% that surge of the international trade is take place because of some kind of increased demand for AI-related semiconductor and AI investment across the countries. However, this is expected to be reduced to just a mere 0.5% in 2026. The reason is stockpiling of AI, demand for AI will disappear. Then there is some kind of inventory is increased in semiconductor, and then DRAM demand is also big currently. But however, as long as it is satisfied, then no more surge. Then we have no driving force that keep the international trade go on. So this is the kind of concern, and we should be careful about it. Therefore, that's why I emphasize that don't be complacent. Do not remain complacent about some unexpected surge of the export due to the cars and the semiconductors, and also with the help of the settled percentage of tariff, which was lower than against clearly the India and the other countries. So this is very optimistic and a good indicator. But I'm concerned is this could be just a transitory moment. So in order to maintain our growing background or fundamentals, we need to foster domestic economy. So to that regard, we need to decrease the interest rate further. That would help alleviate the burden of tariff for the big exporters, such as Samsung and Hyundai. And then also it could improve the domestic economies to get better in the coming years.
Right, and speaking about bolstering the domestic economy, Celio, lawmakers across the aisle, they came together to pass the budget bill for next year proposed by the government, which stands at roughly 728 trillion won. Could you walk us through the spending bill and what does it tell us about the Lee Jae-myung administration's priorities for 2026?
Well, if we look at the budget just passed this week by lawmakers, what really stands out is the scale and its symbolism. As you mentioned, it stands at 728 trillion won, is the largest in South Korea history, and even more striking, it was approved within the legal deadline, something that has happened only 3 times since 2014. So politically, this signals a rare moment of cooperation between two parties in a really polarized politics these days. And now what's actually inside the plan, both parties agreed to keep the government's overall budget size intact. They did cut about 4.3 trillion won, but then reallocated that money within the same envelope, which shows that the debate wasn't about shrinking the state, but about where to put the money and what's the priority. President Lee Jae-myung's flagship program were preserved almost entirely. That include 1.15 trillion won to support regional currencies, a major tool in its strategy to boost local economies, and 1 trillion won for the National Growth Fund, which is designed to channel public and private investment into future industries. And even in areas like AI development, where the Conservative People Power Party pushed for a reduction, only partial cuts were made. In other words, the core of Lee Jae-myung's long-term economic vision remains intact with his budget. But this plan also reflects a sort of compromise. The Democratic Party obtained increased in a sector tied to digital sovereignty, energy transition, like a disaster recovery infrastructure for fires or flooding in summer, and for the also more support for a decentralized national grid for the energy. Meanwhile, the Conservatives secured funding for more bread and butter items, other constituencies, expanding urban gas pipelines, and raising allowance for veterans. Beyond the spending itself, lawmakers also passed tax measures tightly linked to the budget. They restored the corporate tax brackets to their pre-Yoon levels. They also expanded the education tax on larger financial and insurance firms. And even though the opposition resisted some of these hikes, in the committee, the ruling camp pushed for a whole package through the final plenary session. So broadly, the 2026 budget showed what the priorities are for Lee Jae-myung as one administration that wants to spend big on future-oriented growth, like digital infrastructures, local economic revitalization, and green energy also, and while still signaling fiscal responsibility through negotiated reallocation with both parties. Politically, it shows that despite deep division, there's a room for compromise between the both parties.
Right, and also quite a bit of spending for defense next year as well. All right, I'm afraid that's all the time we have. Celio, thank you so much for your time and your thoughts. Professor Song, thank you very much for your insights today.
Yeah, thank you.
Right, that ends this edition of Press Perspective. As always, thank you for watching.